Welcome to the Art of Money Podcast with Art McPherson.
And this is the Art of Money Podcast with Art McPherson and Luke McCarty, artofmoneyradio.com for more information on the McPherson Financial Group or to schedule that initial complimentary consultation. We appreciate you listening. Now, let's get to the show. Art McPherson, Luke McCarty. All right, help me out. I'm not invested in Bitcoin. I don't really understand it, even though you guys try to explain it to me. But I know over the past couple of weeks, there's been a lot of drama in cryptocurrency. Can you give me the Cliff Notes version?
A lot of drama. Now, we have clients, we have, potential people who just, talk to us and ask us about crypto. And we always say, and we've said it on the radio, be careful. Mm-hmm. Well, here's a good example why. One of the second largest exchange for crypto basically went insolvent and bankrupt. Now, when we say exchange, think of like, Charles Schwab, Fidelity, TD Ameritrade. Those are the exchange, for stocks and bonds and mutual funds and things like that. Well, the crypto exchange essentially was a big, I almost want to call it a Ponzi scheme, right? The CEO was funding his own hedge fund with clients' money. Hedge fund was going under, clients lost money. There was a run on the exchange. And now it's zero, and he was on the run. I think he's caught now, but it's billions of dollars gone.
Luke, he was just going to Argentina for a vacation.
A little vacation.
Argentina, the Bahamas.
Just to catch his breath. So what does that mean for the bottom line? Like, how will this affect, Bitcoin and crypto moving forward?
Well, if you're an investor in that, you basically, whatever you have invested, it's gone if you weren't able to get your money out prior to this. So whatever you put in there, it has no value. So one of the things that always bothered Luke and I about crypto is there's always a certain value, and I knew for sure on the actual Bitcoin itself because it was the one that had blockchain with it. So you had a value to blockchain, and there is a value there. But is it $20,000 value? Is it $500 a coin value? I have no idea. The rest of it was just, optimism and pessimism on the actual currency itself. So we have seen Bitcoin fluctuate anywhere from $300 to $400 when it first came out, all the way up to $65,000 a coin. But that's just supply demand, and there is nothing. You can get all kinds of manipulation going on. You got people like Elon Musk of the world that can put $35 billion into the Bitcoin. Mm-hmm. But if he can do that, that means he can also take $35 billion or $50 billion back out.
Right.
So when you get those kind of money flows, it can have all kinds of fluctuations and all kinds of valuation shifts. And that's why he said, just be super, super careful because it's like the wild, wild west. And there is no government backing. There's no governing body, and there's no guarantee for anything. So whatever you put in there, you better be willing to risk it because as we can now see with FTX going down, whatever anybody had in that platform, it's now gone.
So you've said it before, Luke, that when it comes to crypto and Bitcoin is treat it almost like Vegas money. Go into it, have a little bit of fun, but don't put the entire savings, the entire pension into Bitcoin.
Correct. And so, essentially it's kind of like the bank going under. So you had your crypto coins at this exchange and the exchange went under. And do you know who had a Super Bowl commercial, or maybe not Super Bowl, but a big commercial about this FTX exchange?
Was that Matt Damon? Or was that?
It was probably Matt Damon, but I'm thinking Tom Brady and Giselle.
That's right.
They lost hundreds of millions is what has been reported.
It's been a rough couple of months for Tom Brady.
Yeah, that has not been a good time. No,
Bucks not playing great, getting divorced, losing money.
If you want to go down the rabbit hole a little bit, Ukraine had a bunch of money in this FTX exchange. And you wonder where Ukraine got their recent money from?
The United States.
The United States. You know who the CEO of this crypto exchange was a big donor of?
The Democratic Party?
A political party, yes.
Oh, well.
And it was the Democratic Party.
It was the Democratic Party. So there's kind of this, I don't know if I want to say it out loud, but it's speculation, but that's
what it looks like.
Those are some facts. So there's a lot of implications of this crypto exchange going down.
And you've said it. We've talked, Bitcoin and crypto for what feels like about 2 years now. And you've said it from the very beginning. Look, there are some opportunities with crypto, but there's also a lot of risk involved as well. So if you have questions about if Bitcoin could be or if crypto could be in your future a good option, we'll give the team a call at 321-425-8550. The October CPI number eased the inflation number from 8.2. Now it's down to 7.7%. Lower than expected. They thought it was going to be 7.9, but again, 7.7. So the question is this a sign that inflation is getting under control?
It's a sign that potentially, it's definitely coming down from the 8.1 level, to the 7.7. So it's coming down a little bit. 7.7. Back in February was a horrible number. 7.7 today. Everybody's celebrating. Congratulations, Fed. You have it under control. So I think the markets had too much euphoria when it comes to it. And I think it's a little overreaction to some good news. I mean, don't get me wrong. It's not bad news by any means, but the Federal Reserve still has a ways to go. And there were a couple comments from the Fed saying, hey, we still have a ways to go. Let's not overreact. And, there's even more layoffs and things coming now from other large companies. Things are starting to tighten more, slow down more, but what that did for the market, had a big run up in the market. The anticipation of the Fed raising rates at the same, rate of rising has gone down a bit. And so now the Fed may not have to raise rates as much to get inflation down, but we still have, make up a number, 5% to go. Yeah. Get down to 2 to 3% range. There's still a lot of inflation baked in.
Yeah, but we are much better than at 9.1, where we peaked in July. So it's nice to see it coming off the highs. So it is finally nice to see the interest rate rises are starting to do its job. And now there's more optimism out there, Mark, that we could have a soft landing instead of a recession, which is what everybody doesn't want to see. Soft landing means we have some layoffs. We have some corporations cutting back in anticipation of things slowing down, but we don't have it wholesale. You still have a lower unemployment rate. We don't have 12% unemployment. We still have, very low numbers right now, and like to see it that way. But we'll see. We'll see what happens, just like Luke's talking about. But it is a positive thing, and that's why we saw the market react as positive the day that news came out.
And I'm not proud that I saw 7% as the inflation number. I'm like, all right, little victories, because we've been stuck in the 8s for so long. It does.
Correct.
It feels like a little victory.
It is a little victory, especially with the unemployment rate's still really low. It's like 3.7. And so that's kind of where Art was getting to, more of the soft landing. Maybe the Fed can tame inflation without big layoffs.
Right.
And, time will tell.
Yeah, but the reality is, over the past 12, 15, 18 months, if your portfolio is really taking a hit because of inflation number, these interest rates, the down economy, give the team at the McPherson Financial Group a call. Hey, let's take a look at your portfolio. Let's see what adjustments need to be made. And if you have that $500,000 in assets, that initial consultation, no cost, no obligation to you. 321-425-8550, artofmoneyradio.com. Art McPherson, you just mentioned a recession, and I know you're hearing a lot. If we're going to be in a recession, how bad is it going to be? Well, I want you to hear this clip from Harvard economist Kenneth Rogoff, who offered this unfortunate pessimistic view, and he told Fox Business.
You really have to look at the world, which is in bad shape. I mean, Europe's in high inflation, recession. So it's very hard for the United States to resist that. I mean, I worry that not only we're going to get a mild recession, I think the chances that we get a significant recession are really pretty high.
So you were just talking about a soft landing. Some economists think that we're going to be into a bad recession. What's your take?
Well, that is part of the game the Fed plays. You have to be very, very careful when you start raising rates so rapidly. So if you kind of look what has happened the last 3 times the Fed did this, they typically will raise and then they'll plateau and then they'll have to drop again. So they kind of overdo it, have to pause for a while and then start cutting back because things have slowed down so much. They have to kind of get the economy back up and running. So will this be any different? I doubt it. I think, they're doing what they wanted to do, which is try to slow things down by raising the cost of borrowing. You could have borrowed for a home back in December at 3.5%, and right now it's over 7%. So that has priced some people out of the market, or other people are having to hit up grandma, grandpa, mom, and dad. Uncle, sister, brother, nephew to be able to get in the same home because it's so much more expensive. Luke and I were looking, with a couple clients and, to borrow for a $500,000 house back in December. It was about $2,800 a month, including your escrow. And right now, if you did the same $500,000 house, it's about $4,200 a month.
Ooh. So would you recommend, Luke, even though interest rates are high, the market's cooling just a little bit, and I know a lot of retirees like to downsize in retirement. Would you recommend now being a good time to possibly downsize with the lower cost of a house?
It could be if you need to downsize because of your budget. It may not be the best time to sell, even though, your house value's gone up a lot over the last couple of years. It feels like the peak of the housing market here in Brevard, was several months ago. I've seen a lot of houses on the market now that are kind of reducing prices. But, if it comes down to your budget and if you can, sell your house still at a high premium from what things were before the Federal Reserve printed $8 trillion, if you can still get quite a bit of money for your house, it could make a lot of sense to downsize, especially with these two hurricanes that came through. If you're living on the water and you have, a beautiful piece of property and you're tired of, taking care of it, now it could be a good time to get out of those. And we, like Art, Art's pointing to me, no, Art, I can't buy your house.
No, what I was laughing at is you want to buy a house on the water. So I'm like, Luke's kind of like prepping the primer
I'm
here.
prepping the primer. I'd love to have a house on the water, but I know right now at 7% is not a good time for Luke to replace my mortgage with a 7% mortgage. So I've been telling a lot of people, unless you have a lot of cash to put down, be careful because your payment's going to be higher. But history tells us in a couple of years, rates will be low again and you can refinance. So there's different programs out there. I've seen Rocket Mortgage had a decent commercial about, getting a lower rate now and a guarantee refinance in a couple of years. There's some new strategies coming out.
It's all about the wants and needs in retirement. Let's customize a plan so that you can achieve both. With the help from the McPherson Financial Group, we can get you there. 321-425-8550, artofmoneyradio.com. And Luke, now that the midterms are behind us, and we were talking a little bit earlier with Coach Julie about how, hey, give Florida credit. They did it right. You had Election Day, and before the clock struck midnight, you knew who won. So well done, state of Florida. So with midterms behind us, do you think that the Biden administration is going to officially come out and announce that we are in a recession right now?
I don't think they'll announce something like that. I mean, what we were worried about is the Democrats holding the House, the Senate, and the president, and then, changing the tax law. Mm-hmm. But I think hopefully common sense will prevail and, they won't want to get blamed for raising taxes into a potential recession. So they maybe won't go that route. But, I think their terminology of things, of what we've been told this year from either, the White House, making up a definition of a recession or the Federal Reserve being wrong about everything. I mean, it's a tough time right now in the political environment to, trust the things you're hearing. And of course, I missed the first part of the show, but, how can Florida count faster than the rest of the world or the rest of the country?
Because we made our election day. If you cheat, it's a felony, and nobody else did that. It seems like nobody cheated in Florida. And there was a really big red wave in Florida. It's amazing how that happens.
You'd have to think at some point we can vote online and vote with your phone and log into your Social Security website and vote. I mean, it's got to be simplified.
For 100 years on Tuesday, you'd walk in there and vote and you'd walk out, and it was done fine for 100 years. And now there's so many different layers to voting, but hey, good on you, Florida. You got it right. Everybody predicted a red wave across the country, and it just happened in one part of the country.
Just here.
321-425-8550. When you talk to clients, I know people are terrified to give up their paycheck, and 55% of those adults said they don't think they'll even be able to replace their paycheck once they retire. So when you talk to your clients in the communities that you serve, is that still the biggest fear about not being able to replace that paycheck?
Absolutely, because back in the old days, kind of in the 50s and 60s, even through the 70s, and even kind of fell into the late 80s, you had a pension benefit. So when you went to work for somebody, typically when you really found your career job, you would work there for 15, 20, 25, sometimes 30 years. Well, when you work there for that period of time, you knew what percent of salary your pension was going to be. There was no worry about the paycheck. You said, okay, I know I'm going to get X for Social Security, and then I know I'm going to get X for my pension. So now what has happened with the whole pension reformation kind of that has been going on the last 40, 50 years, it is basically taking the risk off the pension plans, where the pension plans would factor how much money needed to be set aside for you for your retirement. Now the actual employee is taking that on with his 401k. So they're now allowed to put a certain amount every year away for their retirement, but they don't really know. They just know there's an X lump sum of money. And then how do I take that lump sum of money and turn it into a retirement income that's going to last for the rest of my life? That's why people have so much anxiety about that, because they don't know how to create that income stream that can be guaranteed for life.
Thanks for listening. Want more from Art McPherson of McPherson Financial Group? Find us online at artofmoneyradio.com.
We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Securities offered through World Equity Group, Inc., member FINRA and SIPC, a registered investment advisor. Investment advisory services offered through ProStatus Group, LLC. McPherson Financial Group and ProStatus Group, LLC are separate entities and are not owned or controlled by World Equity Group, Inc. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Investment financial professionals are not licensed in all 50 states. Art McPherson is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Arthur McPherson. Florida Insurance License number A174725.
Today's show has been a work of art.